Electric vehicle company Euler Motors raised 120 crore rupees in its ongoing Series C round. The funds were raised from British International Investment, the UK government's Development Finance Institution, and Green Frontier Capital. Now, existing investors like Athira Venture Partners, ADB Ventures, Blume Ventures, Ulterior Capital, and others also participated in the round. Joining us now to discuss the fundraising plan is Saurav Kumar, the founder and CEO of Euler Motors. Saurav, thank you so much for joining us on Startup Street today. Like I said, you've raised 120 crore rupees in your ongoing Series C extension round. How much more are you looking to raise? And talk to us about how you plan to spend these funds.
Hi, thanks, Arundhati, for having me on the show. Electric vehicle OEMs are a bit capital-intensive place, so you need to raise capital to sort of scale manufacturing, scale distribution, and bring interesting product to the consumers. So far, I think our focus has been on the product development and getting the manufacturing right. Last year, we have focused now on scaling the sales part of the business. And we think that over the next 1 or 2 years, we might continue to raise capital. And sooner or later, I think we'll only need capital to grow, I would say, sustainably. I think that would be our sense. I don't think we are going to be just raising capital for chasing growth, but mostly toward sustainable growth.
Okay, so you're chasing sustainable growth there. You know, some of the targets that you mentioned is to be in like 40 cities by the end of this year. Also, scaling up production is huge for you. So talk to us about where you're at now and how much production will you scale your production by? How many cars do you hope to make a month?
Yeah, so let me give you a bit of context. So almost 5 quarters back, if you look at Q2 of 23, we did roughly 125 vehicles in that quarter. Today, almost 5 quarters later, we are doing close to 800 vehicles. So we have ramped almost, I would say, 7x over the last 5 quarters. And I think our intent is to get to another 2x in the next 2 quarters. So we would be doing almost, I would say, 14x over the last 1.5 years. So that, I would say, has been a phenomenal growth for us in terms of production, in terms of sales. Obviously, we are going to deploy these capital not just toward production, but also making sure that services on ground is maintained in the similar fashion as it has been in the early years when we were doing, let's just say, 100 vehicles in a quarter. In production, we are right now at a point where we are manufacturing 800 to 1,000 vehicles in a quarter. And I think we'll get it to around 1,500 to 2,000 over the next within 6 months.
So 1,500 to 2,000 vehicles in the next 6 months. Now, let's look at the numbers then. In FY22, your gross revenues grew to 17.6 crore rupees, but your losses also jumped nearly 90%. So talk to us about where your revenues are at currently and how do you plan to bring down your losses? What's the target here?
Yes, certainly. So if you look at our FY20, just to add to that, FY23, our revenue was almost like 59.9 crore. And we did on an EBITDA level, our losses were around 125 crore. But if you look at this year, our target is to get to almost 190 to 200 crores of revenue. So almost taking like 3.5x of jump in revenue, and our EBITDA would be almost slightly similar, maybe around 130 to 135 crore. So we are going from 125 crore of EBITDA burn last year to almost 135 crores of to 140 max this year. But our revenue would have grown like 3.5x. I think next year should be something similar, but revenue growth again would be like at least 2x to 3x. But after that year is when we think that our EBITDA burn will reduce significantly, because as you're scaling in automotive, you have to get to a certain kind of scale to hit a particular gross margin, and then that scale kind of takes care of your general admin and some of the other costs of the business. Because the production and your sales are the things that are kind of growing with as your production and sales are happening, but your general admin and people cost tend to non-linearly sort of grow. So that's something sub-non-linear. So that's something we think that over the next 1 year, we should be doing similar EBITDA burn, but the year after, it will reduce significantly for us.
All right. So the year after, you'll see a lot of that EBITDA burn go away. So give us a sense of the kind of demand that you've seen for your flagship product, the high-load EV, and how many more do you hope to sell this fiscal, and what sort of an impact have you created through this?
See, so I think it's almost in 2 years. I mean, 26th October we launched. It's almost 2 years. We have sold close to 3,000 vehicles. I mean, until last month we were selling in around 16 to 17 cities, and in those cities we are almost I would say number one or max number two player. So we have been wherever Euler has been going, we've been taking the market. I mean, obviously, each cities might have its own ups and downs in number leadership position, but overall, we have been leading the chart. If you look at Pan India as well, our market share in the three-wheeler cargo space, I mean, a year or 5 quarters back would be around 3 to 4%. Today, it should be around 12 to 15%. So we've been growing phenomenally. I think the reception for our product is amazing. I mean, what Euler has been able to bring to the market is the right value and price impact for the customer. Like our customers can deliver almost 50% more payload in our vehicle. I mean, 700, it's one of the highest payload carrying capacity vehicle in the segment ever created. It's not just in electric. I mean, with respect to diesel, CNG, petrol, any three-wheeler, it's one of the best that is there. What we are focusing right now in how do we make sure that as we are expanding to tier 2, tier 3 cities of India, how do we still manage the same kind of service? Like in this festive month alone, we have sold more than hundreds of vehicles in tier 1 cities like Delhi. But being able to service in Delhi, which has been our home ground over the last couple of years, we've been able to do that phenomenally well. But how do you scale that when you go to 40 cities? I think that's where we've been thinking. And we want to maintain the same kind of SLA. And I think if we can do that, what we've been able to show that even if we are a new brand, people are willing to take bet, even if the products are like almost at 4 to 5 days.
Right. So big expansion plans there with your flagship product. But we're completely out of time. So thank you so much for joining us on the show today. And we wish you all the best going forward.
Thank you. Thank you so much, Ranjiti, for having me on the show.